Have you ever sat down after a long 10-hour workday, looked at your bank balance, and felt a lingering sense of anxiety? You're living in America, the land of opportunity, but it feels like you and Appos, stuck in a loop. Work, pay bills, repeat. You know deep down that leaving your money in a standard savings account means inflation is quietly eating away at your hard-earned cash. You want to invest, but every time you turn on the news or scroll through social media, you see flashing red and green charts, confusing financial jargon, and market crashes that make you want to stay far away. You Don and Appos have time to watch the stock market from 9 to 4. You Aaron and Appos, a financial analyst, and you Shouldn't and Appos, have to be. Your dream is simple. You want a solid financial foundation so you don't have to worry about retirement. You want a generous college fund for your kids, and most importantly, you want your money to work as hard for you as you do for it. If that sounds like you, this video is your roadmap. Today, I'm going to share an investment strategy one call and quote, the lazy millionaire strategy. Quote, it's a way to own the wealthiest companies on the planet with the least amount of effort, requiring only about 15 minutes of your time each month. First, let's be honest. Why do most people fail or fear starting? It's because they think investing means, in quote, trading, in quote, buying low and selling high, or guessing if Tesla or Apple will go up tomorrow. The reality is that for busy people, the more you watch the market, the more likely you are to lose. Why? Because when you and Appos busy, you invest with your emotions. You buy at the peak because of, in quote, FOMO, end quote, and you panic sell at the bottom when the market dips. The strategy I'm introducing today is passive investing. Instead of trying to beat the market, we are going to, in quote, by the market. In quote. To do this, your most powerful tool is the index fund or an ETF. Imagine instead of trying to find one perfect apple in a massive orchard you know nothing about, you just buy the entire basket containing all the best apples. In the US, we have the S&P winking and tongue-poking smiley 500, an index of the 500 largest, most powerful corporations in the country. When you buy a fund like VOO or VTI, you effectively become a shareholder in Apple, Microsoft, Amazon, Google, and hundreds of others. If one company fails and drops out of the top 500, the market automatically replaces it with a rising star. You do nothing. The system manages itself for you. The power of this is undeniable. Over the last 100 years, despite wars, recessions, and pandemics, the US stock market has always trended upward in the long run. The average annual return is about 10%. This is the, in quote, big result, in quote, you're looking for, achieved without the, in quote, big effort, in quote, of researching individual stocks. But the next question is, how do you know when to buy? What if the price is too high today? This is where we use our second weapon, DCA, dollar cost averaging. DCA is the secret to sleeping soundly at night. It removes the guesswork entirely. You simply decide on a dollar amount you and Appos comfortable with, say, $500 from every paycheck. Every month, on the same day, you use that $500 to buy your index fund. When the market is down, your $500 buys more shares, essentially buying at a discount. When the market is up, you buy fewer shares. Over time, your average cost per share becomes very favorable. This method is perfect for the American worker. You can set up, in quote, auto-invest, in quote, on apps like Fidelity, Vanguard, or Charles Schwab. The money moves from your bank to your brokerage and buys the shares automatically. You Don and Appos even have to log in to click, in quote, by in quote, This is the ultimate minimalism in decision-making. Now, let's look at the numbers so you can see why low effort brings high results. Let's say you're 35 years old and you consistently invest $500 a month into an S&AMP winking and tongue poking smiley 500 fund. With a 10% average annual return, by the time you and Appos re 55, you'll have roughly $350,000. But if you stay the course for just 10 more years, until you're 65, that number jumps to over $1.1 million. Look at that. Your total out-of-pocket contribution over 30 years was only $180,000. But you walk away with over $1 million. That massive difference is the magic of compound interest the eighth wonder of the world. And what did you do to earn it? You spent 15 minutes setting up an automated system. Then, you went back to living your life, spending time with your family, and focusing on your career. The key to this success is decision minimalism. Don and Appos, overcomplicate your portfolio. Many people think a professional portfolio needs 20 or 30 different stocks. It doesn't. For a busy person, the more tickers you own, the more you worry. In reality, 1 or 2 funds are all you need. A fund like VTI covers the entire US market. If you want more, add a fund like VXUS for international exposure. That's it. It's boring, but that boredom is exactly what creates millionaires. Living in the US, you also have incredible tax advantages. If your employer offers a 401k, take it, especially if they offer match. That is literally free money. You should also look into a Roth IRA. In a Roth IRA, your money grows tax-free. Imagine having $1 million at age 65 and being able to withdraw it without paying a single cent to the IRS. That is true financial freedom. To summarize, our formula today is clear. First, adopt a passive strategy. Stop trying to outsmart the market. Second, stick to index funds to minimize risk and eliminate research time. Third, set up automated DCA to remove emotion and harness the power of time. And finally, be patient. Investing ISN and Appos, get rich quick scheme, it's a marathon. The pain of not investing is that you will have to work hard for the rest of your life. The dream of passive investing is that you force your money to work hard for you instead. I know you might